Alex and Layla have shared their calendar. See their diary, it's just like scheduled. An overscheduled life is not a good life.
What's your most controversial belief when it comes to money and time?
Bigger is not better. There are some people that want to build empires. I will look at that and I think, for what purpose?
We all get into business because we want more freedom.
The objective is to escape the prison, not rebuild it.
What does it mean to be time rich?
We all live on a scale of busyness. Busyness is at the very start and wealthiness is at the end. People who are broke often are the most busiest.
What are the characteristics of time-rich business owners?
Who is doing the work for you? Where's the people leverage? Where's the systems leverage? But also, money can't solve every problem. There's some things that money can't do.
Does money buy time?
Well,
welcome to Founders Playbook Podcast, the ultimate guide for entrepreneurs to build their empires, increase profits, and become great leaders. I'm your host, Nelson, founder and CEO of Vibes Creative, Australia's leading video podcast agency. Let's get down to business. Welcome back to another episode. Today's guest has been previously on the show. He's an entrepreneur, investor, business owner, founder, author, podcaster. He's actually now one of our podcast partners. Please welcome back the incredible, the legend, Mr. Lloyd Ross.
yeah, what's up, man? How can I not come back with an introduction like that? It's
Look,
amazing.
the first thing that I'm going to say, if you haven't watched our last episode together, go and watch that. There's so many golden nuggets and things that we're covering there that are honestly going to be extremely beneficial to you if you're trying to really make more money overall. But today we're going to be covering a few different topics. But before we dive into it, last time you were here, you were going through an acquisition process.
Oh,
And
yeah,
you
really, that's
couldn't share the information back then because you were trying to keep the edge.
Yeah.
Right? So
Yeah.
what business did you acquire?
Yeah, great question. That's a year ago. So I was just talking to my business partner with that business. We started a company and the company's acquiring laundromat businesses. And we closed on our first laundromat business. And the reason why he asked me, he said, just keep, let's not tell everyone because he knows I've got a pretty big network. But I think what I've known now about the industry and about the business, it's not so easy to find great ones. And then it's also not so easy to find good operators. And so it's not as easy as what you think to get into the market. I don't like to tell everyone in my business, you know, what I'm up to. I think it's important just to stay focused. But he's going to be speaking at our Become Time Rich book launch at the VIP event. So he's going to let it out of the bag anyway. So yeah, we were closing on our first laundromat business, which by the way has been amazing, incredible. Like, what a business.
How much did it cost you to acquire a laundromat?
This particular one, about $270K.
How much money does it make?
Let me put it this way. It makes, I'm going to tell you the exact figures, but we have a good one and it makes more money than a $2 million fully paid off property.
How much does it cost?
I think depending which one you get, you can get between 20 to 40% margin.
Why buying a laundromat instead of any other type of business?
The reason for it is that it's the type of business that enables time freedom. So if I look at we have 4 companies, and out of the 4 companies, they're all very leveraged. And so in a particular business like a laundromat or like a storage business or whatever it is, you've got assets or systems working for you. So you don't have to always be there. And even our other businesses, we've got a highly leveraged education business. Our books, sell without me being there. Our podcast works without me being there, gets listened to over and over again. We have a group coaching and mentoring process that's very leveraged. We've got a team that makes it very leveraged. We've got a network marketing business that's got recurring product sales every single day without me being there. And an events business that's one to many. And so if I look at all the companies we have, it just fits into that bill of a business that doesn't require a lot of time. And I have a friend of mine and he's got about 5 businesses, and I said to him, hey, which one's your favorite? He said, the one with no people. And so I think I've been attracted to businesses that allow me to be a solopreneur. And that doesn't mean we don't have team members It just means that it doesn't require a lot of physical effort and labor from me, or it doesn't require me to manage and recruit 100 staff, because that's one thing I've not wanted to do, because I'm not into being an operator of a big business. I love my time freedom. I like to be versatile. And I think this business just fit the bill. But it only works because I've got a wonderful business partner and operator who's awesome. And so you have to have that right partner.
If someone were to invest into a business like a laundromat, what should they look for?
You can take a great business and it can turn into a poor investment if you pay the wrong price for it. So paying the right price based on the data and the income is important. Now, sometimes you don't know the exact income of it, because the owner will have all that information and you don't get full disclosure a lot of the time. So, you just have to know enough and then execute on it. But it's important that, like any business you buy, is it profitable? What have the numbers been like over the last 2, 3, 4, and 5 years? What's the demand like? What's the competition like? Doing competitive analysis of the area, like where's our competition? What sets us apart? What's going to be our specific differentiator? Why do people come to us instead of others? And then the reality is, for a business like that, it seems to be that the simplicity is are most important. So like clean, affordable. Does it work? Is there customer service? Is there good parking? And all those things that you would want to look for if you were starting any sort of more traditional business, or any business for that matter. Because if you don't have those basics down pat, you're not going to attract any clients and keep them. But yeah, it's like any other business, I think.
In terms of the acquisition process, do you pay for it or do you borrow money to buy
Borrowed
it?
all the money.
So you literally put no money up front?
Put $5,000 down.
That's it?
Yeah.
Is that something that you simply, because of your track record, you were able to just go to a bank, borrow the money?
Well,
how did that go?
It's not an easy process because in Australia, banks don't take any risk. And in America, banks take, America's a risk-taking place. It's a risk-taking nation. It's been founded on revolution and winning and playing big. In Australia, it's founded on convicts and being locked up and scarcity. And like, if you lose money here and go bankrupt, you're a pariah. You're an outcast. You're a leper. And in America, it's like, oh, hey, well done. Hey, here's some more money. Go again. Type thing. I mean, to that extent, it's not to that extent, but it's like that. So the culture there is like more, let's go. In Australia, it's like, whoa. And so with banks in Australia, they just don't lend on businesses so comfortably and well. So it was actually a real battle to get the money, like it was. And they required some security, and I had to put some cash up in a term deposit for some security. But it wasn't as easy as what I anticipated, despite the fact that we've been a long-term customer, despite the fact that we had a multi-million-dollar net, like no other debt, like the dream borrower, but they still won't put up any risk on the table, which is why they're a conservative, banking institution in the first place. And I understand it, but the problem with Australia is now we're not investing in entrepreneurs. We're just investing in people buying houses, and I think it's interesting. So it was hard. It was very difficult to get financing, but the dominoes fell in our favor. I remember I was on the bed and I was just sitting and just charging my phone, and I was getting a call from the bank manager to say yes, yay or nay with the deal. Because I was like, I'm going to have to vendor finance this. I'm going to have to just buy it for cash. I was like, with a business that produces 20 or 40% margin, you don't want to be buying it for cash. You want to be borrowing the whole amount of the money, because, you want to pay 8 or 10% interest on the money that you borrow, and then you can make them, like, it's a no-brainer to borrow all of it. And so I didn't want to put any money down. And so I was sitting on the bed listening, waiting for the bank manager to phone up. He said, all right, I got the results. It's like, everything in life's a test. Like, oh yeah, the results of the next test. And he said, we're going to do it, but 50%, we need some security, and 50% will non-secured. But when you have a non-secured loan, you pay a high interest rate, like 10, 11%. But if it's secured, that part of the loan is like 6%, which is pretty normal. It's like a mortgage. So if they got security, lower borrowing rate. So we did a 50-50 split, and it worked out in the end, but it was a nightmare to get it done. Like, the paperwork, the whole process, it was painful.
But you're the kind of man that just gets things done.
That's right. You just get it done. Like, I was going to get it no matter what. It's just a great business. And, we want to get more of them, but we want to get the right ones. And we have a long-term plan for the company to do that. Again, it's based on a great partnership. Got a great operator partner. I've known him for 15 years. And as we slowly acquire, we've got a long-term plan for it. So I'm not ever really in a business of short-term. I'm always like, what's our long-term plan here? And our company's called Cash Flow Enterprises, and the objective of that company is to buy cash flowing businesses under the company. And so we're exploring all different types of businesses that are interesting, high margin, able to be run with leverage without lots of people. And there's businesses out there like that. You just have to be ready. And so we're planning on more acquisitions in the next 12 to 18 months. But it's weird. You just kind of have to be patient and wait. You're talking to people in the industry, you're waiting, but you got to be ready to pounce. It means you got to have cash, you got to be ready, you got to know the numbers, right? And then you buy when you need to, not when you have to.
Now, getting fully up to speed with your current business and investments portfolio. So you have 4 businesses.
Yes.
A laundromat, network marketing.
Well, 4 companies. So one of the companies is going to acquire businesses. It happens to have just acquired that laundromat business. The other one is an education business, which has got books, courses, coaching, mentoring, programs, etc. And then we have our network marketing company that's effectively got a growing network marketing business. It's 11 years old, that. And then we have an events business, with my business partner, Morgan Nelson, who's been on this show, right? Mm-hmm. And so we've decided to collab and start a business together called Mind and Money. And so we're just beginning to, because for us, it's been a side hustle. Yeah. And he's got his businesses, I got my businesses, and we're just starting to now collab on this a little bit more seriously. And over our next event's in October. And next year, we'll hopefully just really steer that towards being a super successful Mind and Money events business in Australia.
What about the investments portfolio? How many companies are you currently investing
4.
in? And how big is the current portfolio?
It's about 3 million total if you include the cash as well. And it's primarily kind of geared towards Chinese equities because there's not a lot of value. There's not a lot of value. You can always find value in the Australian market. You can always find value in the American market. But right now, there's tons of value in the China equities market. And in some respects, Japan, in those international markets, because the US dollar is really strong, and they're selling into America, a lot of them. So they're making it, they're very compelling. But again, you have to know what you're doing. And I just think there's tons of value in China. So a lot of the portfolio is geared towards that. In saying that, though, we're also an owner of Berkshire Hathaway, which is Warren Buffett's company. And I just got back from Omaha like 10 days ago. I went over there to go to the Berkshire Hathaway meeting, and what was cool about being there with him was there was 40,000 people in the arena in Omaha, and we went through the meeting together, and he does 4 hours of Q&A, and I thought, I've got to go to this because I've been a long-time shareholder, but, you got to go and see Warren before he dies. So we went there, and little did I know what was going to happen there at the meeting was he did Q&A, and then he said at the very end, okay, I haven't shared this with anyone, just my 2 kids here, but I haven't shared it with the board, but I want to share it with you guys. It's now time for me to step aside as CEO of Berkshire Hathaway. And I was like, whoa, we just witnessed the greatest capitalist one of the greatest capitalists in history, literally step aside as CEO from his company that he took from a failing textile mill in 1965 to a $1 trillion company in 2025. And it's the only $1 trillion company that's not a tech company. It's the biggest company in the world by book value, except for the Aramco oil business that the Saudis have. And he steered that for 60 years. And he achieved a compounded rate of return over 60 years of 20% a year. It's actually 19.9%. And he doubled the S&P 500 return over that period of time. So $1 invested into that business produced a 5.5 million % return. He made many billionaires based on that return from that company. And he steps aside, and when he did it, the whole stadium stands up and applauds him and gives him this standing ovation. So that was really exciting to experience that. But we have got that in the portfolio too. So how I kind of structure my money and our money and our lives are a series of businesses that are leveraged, enjoyable, leverage my strengths, minimize staff. I run all of them from the cupboard at home, except for when we have an event on. Which is fun. So my commute time is like 15 seconds. Even our assets, they're also very liquid. I'm not heavy duty on property, especially not now, because I'm finding the property market. And if you see some of my ads and that we shoot and some of the podcast content, I really not hammer property, but I'm not all about it because I'm not interested in buying overpriced things. And right now, property is extremely overpriced in Australia, and it's starting to come off in America. If you go to the American market and look now, there's a housing crisis. It's coming way off the ball. If you look at the data, it's coming backwards. Because what happened was people bought properties, even here, when interest rates were 2%. And now interest rates are 6%, the assets aren't the same value. So we will see at some point when they switch off immigration, they've got to tone that down here. We're going to see a correction, without a doubt. We will have to. You cannot double property from this point on and expect mums, dads, nurses, police officers, teachers to be able to afford it. You just can't.
There will be a good sale
There'll be a
coming in.
reckoning. What goes up must come down.
What percentage of cash do you keep handy for investing?
At different times, 30%. Yeah. So right now it's like 25%.
Got it. Warren Buffett, one of the most influential investors of our time. What was the most valuable lesson he taught you?
Oh, he's been a mentor for so many people. And when you get mentored by Warren, it's like he's speaking to you personally. And I just, if you go to berkshirehathaway.com and you go to letters to shareholders, you can access them for free. And you should read every single one from 1960, whenever you started, 1965, 1967 to now. And I read them all, letter by letter. And it was the greatest investing masterclass I think I've ever received. I learned so much from how he approaches investing, life. But the best advice, if you're going to buy stocks or invest in stocks, you're not really buying a stock or a blip on the radar on the screen, a candle chart. You're buying a piece of a business. So how you would approach buying a piece of a business, try and look at it like you're buying the whole business. And ask yourself, do I want to own this business for the next 10, 20, and 30 years? And can this business produce returns above average, durably and competitively, consistently for the next 10, 20, and 30 years? If the answer is no, you don't buy it, which means 99% of things I look at, I don't buy. So a lot of the stuff that you do is not wasted work, but you don't execute. And he said that if you do it like that, if you approach investing like that, you can almost have like a punch card with 20 punches on it. And he said that's the only amount of stocks or businesses you can buy in your entire life. And once you run out of 20 punches, you're done. And he said if you approach investing like that, you'll be more careful and more particular about which ones you buy. And so that's why I don't trade and I'm trying to swing the capital into big positions in great companies that I want to hold for a long period of time. And that's the simplest way to do it. So I think of those lessons that I've learned off him that's incredibly powerful, that lesson. And many others like about time management. I mean, we could go on. Yeah.
Many times it's just putting the work up front, right? Just understanding the asset, the company.
Yes.
Putting the capital and just sit back.
Yes. If you do the work correctly at the start, investing is like to place the capital and then do nothing. And his business partner, Charlie Munger, who passed away last year, he would say that, you can beat the market just by sitting on your ass. But you got to select the right businesses. You got to do the homework. You got to be a reader. Like you've got to be reading things, understanding things a lot every single day, and then be ready. And I think he talks about it in his, he talks about it a lot, Warren. He says, Berkshire Hathaway's results are really based on like 12 good acquisitions. Yet he's purchased 400 different stocks of different companies over that time. So I think 12 out of 400. So I think about that a lot. I'm like, well, I only have to be right a couple of times and then do nothing. And it's the same with our companies and our businesses, because you can be tactically correct, but strategically incorrect. And when you're an entrepreneur, you can be so caught up in work, go. I got to make sales. I got to do it. And you can be doing all those things, but you can be, that's tactically correct. But what if you're doing it in the wrong business model that's going to disappear in 10 years? What if you do all that work and it's gone? And so I'm very careful about, is this strategically right? Does this fit my objectives for my life? Does this get me around better people? Does it make me less busy and more wealthy? Does it require more decisions in the future or less decisions in the future? So I think those things are called second order consequences. And a second order consequence is when you make a decision, you've got to then think about the next decision, which is also what makes chess a fun game to play, because you're not just making a move, you're making a few moves, knowing if I go there, that will happen now, that will happen now. So that teaches you second order consequences. And Warren Buffett's got a saying in investing, and he says, and then what? And then what? And that's the question you ask yourself. So when you buy a laundromat, then what? When you buy shares in this company, then what? Like, are you going to hold them? Like, or are you just trying to buy and sell? When you start a podcast, and we started the podcast, and then what? It's like, what is the next consequence of the action? And if you scale that, what does that make your life look like? And I don't know if enough entrepreneurs or people think about second order consequences, you know?
And speaking of that, what does it mean to be time rich?
Well, I was inspired by the fact that Warren Buffett ran his partnership in the 60s and made millions and millions of dollars, hundreds of millions of dollars, running it from the sun window in his house. Like, I was so inspired, but I'm like, whoa, he made millions of dollars working from home. And I was like, I want to be that. I want to do that. I want to own my time, which means I didn't want to commute. I didn't want to be in traffic. The only time I commute is to come hang out with you guys in the studio, and it's well worth it. But I choose to do that. I don't have to do that. So becoming time rich is just simply a matter of being able to choose how you spend your hours in the day. And I've got to be honest, I learned a lot of that from Warren Buffett, because he's like, how do I want to live my life? How do I want to do it? And even Charlie Munger, his business partner, said, I didn't get rich for the Ferraris and the social status or the jets or the whatever. He got rich because he desperately wanted independence. And that means doing what he wanted to do each day, being around the people he liked, not having to work with crappy clients or do things he didn't enjoy, read the books he wanted, teach about what he wanted to teach, and just build the businesses he wanted to build. And that for me has always been my objective. And so when I found myself in a 9-to-5 job, commuting 3 hours a day to work in 2009, I had a commitment to become time rich. And I feel like now I really live that life. I do. I really embody time rich. But I can get caught with the busyness bug too. So we all live on a scale of busyness and wealthiness. So busyness is at the very start of the scale and wealthiness is at the end, because Warren Buffett is not busy. His diary is empty, but he's the wealthiest guy. If he hadn't given away $35 billion in 2008, he'd be the wealthiest man in the world today again, because he's that good. But he's not busy. So if we put him on the very end of the scale, then people who are broke often are the most busiest, right? You look at nurses, they're super busy doing shift work. Mining employees, and there's even more busy people than them. Hospitality workers, they're super busy, but quite often also broke. So busyness doesn't equal wealthiness. And so I've often thought to myself, where do I sit on this scale? And I'm very conscious of that every day. I'm like, where do I sit on the scale today? And if you make a mistake, and it's easy to do, you fall down the scale of busyness because you say yes to the wrong things. You don't protect your time. It's easy to slip. It's easy to slip, especially as an entrepreneur, where you feel guilty if you're not working.
Absolutely. It's so easy, especially as a business owner.
Yeah.
Just that slippery slope of I'm too busy now, but busy on the wrong things that are not really even moving the needle as well.
Yes.
And protecting the time.
Yes.
That's one of what you just said there, protect the time, is one of the things that I focus the most these days.
Yes.
I hate when suddenly you open your eyes and you're like, wait, how am I so busy with all this stuff? How is this helping the mission? How is this helping me achieve what I'm trying to do? And suddenly you're already committed, you're ready to say yes to things, you don't want to backtrack, all this stuff.
Yeah.
But yeah, you're absolutely correct of one of the main things that as you get more successful as well, as more opportunities come on the plate.
Yeah.
Just being able to say no and being okay with protecting your time
Yes.
at all costs.
Yes. And it is very difficult because when you're first starting out, you are everything as an entrepreneur. So like it's going to be messy.
Yeah.
Like you're not going to be just this perfect time manager. No
Messy and painful.
Messy, painful, make mistakes. Yeah, that's all part of it. But at some point, you can't keep repeating that. And so what a lot of entrepreneurs do is they'll just repeat because what got them from 0 to 1, they think it's going to get them from 1 to 2. And the truth of the matter is it won't. It just doesn't. And nor would you want it to, because isn't the whole idea of getting into business so you can have more time freedom? You know, that was the whole objective. That's what we were sold on. And so I follow people now, like I'm inspired by people like Justin Welch, who's like a great solopreneur. You can follow him on X or Twitter. He's awesome. He's got I don't know, he makes 5 or 6 million a year, and he just got high margins, and I love it because he says, you know, I went and had lunch with my wife today. And I do that. Like I was having lunch, like I was walking the other 3 days ago. I'm sitting there and I've got this big book launch coming up. We've got, another keynote this weekend, big event. Well, there's things going on in our lives that we've chosen to do that we love. So we've still got things going on. And I've got a lot of work to do still that I've chosen to do because of these things with our mission. And she said to me, hey, I'm going to go for a walk with Elvie, our dog. And it was a beautiful sunny day. And, you know, it's like it's coming into winter. It's crisp outside and it's fresh. And it's 10 o'clock in the morning. And she said, I'm going to take him for a walk. But you don't have to come. I know you got things to do. And I did have things to do. No question. But I'm like, if I can't do this now, what's the point in the work? So it was a very philosophical moment. I was like, I'm coming. And, it wasn't much. It's like 30 minutes, right? But if I can't spare 30 minutes to go for a walk with my dog and my wife, they're the most important things. Like I said to her, when we all started walking, I'm like, this was the most important thing I could do.
That is so good.
Oh, it's so good.
And it sounds so simple, but someone that has been in the trenches building a business will know exactly how valuable that is and how you get that sense of guilt by, I should be working, I should be pushing forward, I should be getting things done, right? And we all get into business because we want more freedom, because we want to own our destinies and our life.
Yes.
And then you realize that the first thing that happens is that you build yourself a prison.
Yes.
And then it's kind of getting to that next stage where it's like, wait. This is not what I signed up for.
Yes.
I need to build something that does give me that freedom that I'm looking for.
Yes.
I need to escape this prison and make it, more of an asset as well.
Yes. The objective is to escape the prison, not rebuild it. And that's what I've objectively always tried to do. So like, I mean, at some point you got to do work, so that's fine. But structure it in a certain way that gives you flexibility. But also when the flexibility is available, take it. And in that moment, I could have made the decision, no, I will do the work. But for what purpose? It's decision making. It's not, you made the decision. And you can also make a decision to get out of it. But what I've noticed a lot of entrepreneurs do, and I don't know whether it's because they've never been in some sort of office prison, but I see them I've seen this happen where they'll start working from home, which is great because there's no commute, there's no office rent, there's no staff, there's none of it, and it's great, right? And by all accounts, it can be a bit challenging, but it's great. And then they have success in their business, and before they know it, they've leased an office. They've now got a commute. They've got staff in the building. And I'm like, that's so interesting. I mean, that's great if that's part of their mission and it's important because some businesses you got to do it. But I'm like, for me, I look at that and think, I couldn't run away from that fast enough. I needed to get out of that. Why would I go and rebuild it? Businesses aren't walls. They are ideas and exchanges of value and problem solving for people, and you get paid for that. That's entrepreneurship. So I think, again, some businesses need those. Like we couldn't have our laundromat without walls. But I didn't want to rebuild what I wanted to escape. So So I didn't want to go get an office, then get staff and go to my wife, oh, it's 9 o'clock. I've got to be in the office again now. Now I've got to do this. Now, so I chose that path. And that's why I chose businesses that didn't need that. However, the businesses that do, you still have to have it. Like if you need a studio, you got to have a studio, right? But even if you've got that, I think it's still important to set aside time where you're not making it a prison. Like have the time where it's flexible. You leave or you go do something else for the day. Or you have just break in a little bit so you're not stuck in a box.
What are the characteristics of time-rich business owners?
Well, time-rich business owners, they have a lot of leverage. And if you feel overwhelmed, it means you just don't have leverage. And that's like a word that never gets spoken about, because when I say leverage, people think financial leverage. They think, oh, I'll borrow 80% against this asset. That's financial leverage. That's not the type of leverage I'm talking about. I'm talking about the leverage that Archimedes, the great mathematician of ancient Greek times, he discovered leverage. He discovered the fulcrum. And he discovered if you have a lever, a fulcrum and a lever, if you lever it, you could lift heavier objects with less effort. So he effectively invented or discovered leverage. From an entrepreneurship standpoint, what leverage looks like is, how can you achieve more by doing less? So what a time-rich business looks like is, where is the leverage? And on a smaller scale, who is doing the work for you that you shouldn't be doing? What systems are doing the heavy lifting for you that no one should be doing except for software or robotics or a machine? Where is that leverage? So where's the people leverage? Where's the systems leverage? And if you look at assets, where's the capital leverage? So like, for example, if you have a $3 million, property storage facility, shares that produce dividends, there's some wonderful portfolios you can buy, ETFs that produce 13% dividend yields paid monthly. So if you park $3 million in that, you're getting what, $330,000 a year in passive income. That's good leverage, because you're like, well, I'm getting money for doing nothing. So where's the people leverage? Where's the systems leverage? And where's the capital leverage? But also in the people leverage component, where's the partnerships? And partnerships is the most potent form of becoming time rich as a business owner I can think of. And a perfect example is our partnership we have, right? So I don't have a studio. I wouldn't even know how to turn the camera on, right? I know my weaknesses and where my genius are, and it's not in production, creative. I'm just not. I have become a creative under sufferance. I'm a business guy. I do this under sufferance. But so I know my strengths and weaknesses, and I'm like, well, I was treating our content like a hobby and not $1 million business. And so I'm like, I need to partner with someone who's better at this than me. So who do I partner with? You guys, right? So I'm like, now that's a partnership. So you do things great and I do things great. And together we do great things, right? And so my partnership with Morgan in the Mind and Money events business. He's an event genius. He's just so good. And I'm like, well, I'm not. I'm crap, but I have certain things he wanted too. Like I had the network of people, the financial knowledge and resources, right? And the time. And then he had the expertise and the skills and the people and the time, so we come together so someone has to have what you don't have, right? So you mix resources and you get a better result for clients, yourselves, and you save a lot of time. In our laundromat, I don't even wash my clothes at home. How the heck am I going to run a laundromat? I'm the worst guy to have in a laundromat. But I came to the partnership with capital, with strategic know-how, knowledge, business experience, and whatever, and a network. So I brought that, and my operator partner, he brought operations and things I couldn't do. And in our education business, it's the same. That business is run by two core partners. A partner does the marketing and a partner does the acquisitions. And I've even, got a assistant who does a lot of delivery with me. So like we are partnered in we call it effectively with you guys now, it's like a box, it's a square. So you guys do the content, then Lion does the marketing, Fraser and the team do the sales and acquisitions, and I do the delivery. And that's quite leveraged too, because I have some help there. So that's a beautiful, and you can only scale businesses when you have that, because you can't. It's better to have 10% of a watermelon than 100% of a grape. And then in our network marketing business, we have systems leverage. We partner with a company. They produce the product. They ship it. They do the pricing. They do the customer returns. They do everything. They do the technology. And all Alicia and I do is we do the selling, and we recruit and train a sales team. And they pay us every week. So that's very leveraged. So I think, where's the people leveraging your business? Where's the partnerships? Where are the partnerships? That's incredibly important. Where are the systems? What software are you using, right? To do a lot of the automation. And then, of course, how you leveraging your capital from your business to produce more money with no effort. Great type of leverage.
Partnerships, it just sounds, even for myself now in the way you describe it, it makes absolute total sense, and something that I look forward to do more of it as well, because as you get more experience in business, you realize exactly that it's better to have 10% of the watermelon than 100% of the grape, right?
Yes.
That ultimately it's easier to get rich with other people all together, trying to just do it everything yourself, right?
Yes.
In terms of those partnerships, what should you look for in partnerships in order to become time rich and build a better business?
Yeah, it's a great question. Well, the obvious part of a partnership is selecting the right person. And how you select a business partner is not too dissimilar to how you would select a life partner, a marriage. You've got to look for red flags early, and you've got to test them out, play little games and tests, slight games, and to see how they're going to react and, be. And so all the partners I've partnered with, I knew them before, and I was watching. Not skulking around the bushes watching, but I was watching how they operate. So obviously with my wife, Alicia, knew straight away, like we're already in partnerships in life. This is going to be a great business partner. But the company, was it around a long time? What are the core values like? Do they do what they say they're going to do? Do they over-deliver? Do they care about the people? Do they have other people walked this path and had success? As I dive deeper, does it get better? That's what I was looking for. And the other partnership, like I knew Morgan for 8 years before we got into partnership together. How is he with people? How does he show up? I was watching all those things. So when he said, hey, you want to get in partnership? I'm like, yes. It was very quick but if there was one thing off, it was like, nah, let me have to think about it. But everything was on. My other business partner, he taught me how to play golf, and I play golf with him. So you can see how people are on the golf course. Do they cheat? Do they lose their temper? So how are they? And you got to watch for a long time before you decide that's the person I want to be partnered with. Can you see yourself enjoying their company in Fiji, in a pool in Fiji having cocktails together? Are you going to vibe the same way? Do you have the same values? With another business partner, I went through boxing and I boxed with him. And so I knew he was tough and he was resilient and he wasn't up himself. And you watch for those subtleties, He was raised well. Like there's good values there. And another one, I was referred to a partner, and I asked questions about those other people that I trusted, what they're like. Great. So that's what you're looking for in a partnership from a character standpoint. And character traits are so important because you don't want to have a partnership bust up. You have to be, but you also have to be easy to work with. And I think what's happened is I was on a podcast recently, a business podcast, and the guy said to me, Lloyd, how have you created these partnerships? And I said, to be honest with you, I didn't create any of them. In fact, probably the only one I created was ours in terms of the one I moved to secure, right? The others, I attracted them. And I think that's interesting. It's like, well, how do you attract great business partners? It's how you attract a great spouse. You deserve one. How do you deserve one? How you're showing up yourself. So when Morgan approached me to partner with the events business, he was seeing things that, Lloyd would be, because I did an event with him once, and I was the easiest person to work with. I know I was. He said, man, you didn't need this. I said, I shook your hand on no contract. I shook your hand. It's a covenant. I'll deliver. And he's like, that I want to work with easy. He wants ease. And I want ease. So I'm like, be someone who's easy to work with. Don't be a pain in the ass. Demanding all these things. Just show up, do what you need to do to your partnership, and go home. And don't be a dick. So I think that's a part of it too. But then on a smaller scale of like, what's the resource sharing? Make sure you're bringing to the table equal or more of the resources that the partnership needs. Certainly equal. And be prepared to do that and be prepared to do the work. Be a good partner. So select them well based on character traits. Then be easy to work with. Be enjoyable to work with even, right? And then bring your piece of value to the equation so that it continues to succeed as a partnership.
Absolutely. I love especially the one that you said about the character traits.
Yes.
Because that will tell you so much about someone,
course.
how they conduct themselves
Course.
outside the business.
Sure.
Do they cheat on things?
Yes.
You know, the morals, the
Shortcuts.
ethics, what do they stand for? All
Yes.
these little nuances.
Yes.
We have, funny enough, a little bit of a side story to that, is a question that we ask to people when they come to work to us, especially men in general, because when we look for videographers and video editors, we're looking for someone that is ready for war, you know, for what we do here, to be in the trenches, to really
Yes.
want growth and to be ready to take on a challenge. And very similar to martial arts that you have done boxing, I've done a lot of MMA and jiu-jitsu, is someone that can think under pressure.
Yes.
And that we see the potential, that we can think him to not be panicking like crazy when things are going wrong or when we have fires to put off. And one of the questions that I ask him is like, oh, what are your thoughts on the Barbie movie?
The Barbie movie?
Yes. If they tell me I love the movie, I know we're going to have very conflicting beliefs.
I haven't even seen it. That's
Exactly
the best
right.
answer.
And that's the point.
Yeah.
That's the correct answer.
Yes.
And one of our most recent team members, when I asked this question, he said he was confused, and his answer was, I haven't seen that and I don't intend to see it. I was like, you're the right
You're
fit.
hired.
Yeah, exactly. Exactly.
that's
so
true, though.
again, just a way for you to assess people that is not directly asking them, and for them to tell you
Yes.
what they know you want to hear,
Yes.
if that makes sense.
Well, what's interesting about our partnership is that at the time I was like, okay, now it's time for me to level up the content game. And I was, I tested some things out and I realized it was going to take too much of my own time. So I was like, I need to go bigger. But at the same time, I had also been watching you and how you operate for a couple of years, I would think, right? 2 years,
Yeah, about
probably?
2 years.
So the first time I encountered you guys, it was just there was a lot of humility. I liked that. I was like, good people, right? Just quickly, just the body language, I think, more than anything initially. And then it was like the quality of the work coming out, cool, that's good. And then even just the catch-ups with you occasionally was just good, enjoyable conversation. Good value exchange, enjoyable, and all those things. And then once you did the movie, and we went to that movie, the quality of that, and I can assume to know what went into that, because I know how it is to just do a reel, let alone a whole movie. And I thought, just the high quality, and I think I just, at that moment, I was like, As I was talking to my Alicia on the way home, I was like, need to figure out how to work with Nelson and the team, Nelson and Cal. And even our catch up at that event, I was left there like, I need to work with these guys. What's that going to look like? And I think it was just a matter of time. What's interesting about that is because I'm watching those things, when we started working together on the content, to be frank, I wasn't surprised it was so good. It wasn't a surprise, but it was over-delivered. Like you actually did more than I thought. I was like, as in like, it was more enjoyable even than I anticipated, which is great. I'm like, oh, what a great partner. And it's just, you got to take your time to identify the best partners. And if you do it correct, it's like with the investing. If you do the work at the outset, and you can't always read the future. Even the best companies get through some challenging moments. So I'm not saying that your partners won't create challenging times with you at certain times, but if the character traits are right, of the business, of the partner, it'll survive all seasons. So do the work early.
Exactly. It gives you the confidence that, hey, you know what? We're going to go through difficult things together,
Yes.
but we will come on the other side, right? And
Totally.
ultimately, as you said, it just takes a couple of really good partnerships to see the biggest returns, right?
It takes a couple of partnerships and you're off. Like, you have to have them.
Yeah, got it. Is time money?
There's this old saying that says time is money. And it's an old saying that we all grow up with. And so we do think it is. But the reality is it's not. It's not even close. Time is not money. Time is actually more valuable than money. So if we look at the equation, time equals money, that's how we see time. But the truth of the matter is, in the equation, you have to change it. You have to put time is more valuable with the more than sign of money. And here's why. Because you can get more money. Money is so unlimited almost in its creation based on the resources and energy we have on Earth here, which we don't even understand the limits of yet, that the scaling of cash and money is, you can do it. Like, look at Warren Buffett. He's worth $150 billion. And he's only lived 94 years. So he's got 94 years of time, but $150 billion. So if time equaled money, he'd have $94. You know what I mean? So it's not true. So I know that time is more valuable than money. And when you start putting time in front of money, and that doesn't mean like free time to go drink every day. It's like once you put your time to be more valuable than a certain dollar figure, you will scale your money. Your money will meet you at the same place that you place your time in terms of the value, right? And it's weird how it happens, but the moment you do that, you'll get richer. And so that's like, for a pragmatic example of that is, let's say my content. So I'm going to the car, recording my podcast episodes in there, audio, not doing any video. I'm trying to do video at home. I'm trying to send it out to an external editor. It was disjointed. And I'm like, fuck, why am I placing... And to change that required a substantial investment of money. It did. It was like, this is not going to be This is not going to be a small amount of money. This is going to be a commitment to hundreds of thousands of dollars, right? So I knew that to do it properly. And I think to myself, Lloyd, is your time worth less than $100,000 or more than $100,000? The answer was like, more than $100,000. So why is it you're nitpicking around on things that are taking thousands of dollars when you need to just play bigger? And so that's when, and then once we did that, you don't know sometimes how it's going to work out, but the universe weirdly conspires and goes, you're going to play bigger? I got you back. And then all of a sudden you make more money because you've placed your time to be more valuable.
Does money buy time?
Well, it doesn't buy time because, let's say, for example, statistically, you and I are going to live till the age of 120, right? So 120 years on Earth is what we have. Breaking that down into seconds, every second's valuable for us because we know we have an expiration date based on current science. So if we have an expiration date, we know that we've got X amount of time pills or time modules between now and then. So we can't ever get that back. We just can't. So money can't buy it back. It just can't. But what money can do is enable you to decide how you spend each one of them. And when people say buy back your time, it's not really buying back time. You're buying back your ability to dictate what you do with that time. And that's the beauty of having the money. That's why people want to get rich. It's not because they want to, some people they want to get external validation and social status. They want to get accolades and they want to get you, fine. But deep down, they want to do what they want to do with their own time. Whether it's veggie gardening or it's racing motor cars or it's yachting or it's flipping playing tennis, it's the choice people want, the freedom. And that's the beauty of money, buying what you do with your time.
Does having more money solves all time problems?
Well, it could, but the answer is probably no, because there will be at some point some birthday party or some thing you've got to go to under sufferance that because we're social animals. So sometimes you got to go do things that, like, I don't really want to do that, but you've got to go. So no amount of money will ever get rid of the fact you've got to do things sometimes you don't want to do. And I'm not talking about just birthday. Like, there's certain things you don't want to do. Like, in the world we live in, you're going to be placed in situations that money can make it more comfortable, and it can, appease some of the discomfort. But there's some things that money can't do. Like, it can't accelerate having a baby. You have to gestate for 9 months. Like, you can't speed that up with money. It's going to, sometimes if you get like a terrible cancer diagnosis, doesn't matter how much money you throw at it, you can't slow that dying process down. So money can't solve every problem, but it can solve money problems. So if you had a choice whether you were, you're dying of flipping cancer, whether you were poor or had money, I'm fairly certain that having more money would help a tiny little bit. But it's not going to solve every problem drastically.
It's just really up there with oxygen, but it's not everything.
Someone said once, they said, so money doesn't make you happy, but it allows you to be miserable in comfort.
Some people would say, I would rather be crying on a G-Wagon.
Yeah, I prefer to be crying in my Ferrari than in my Toyota Yaris.
Yeah.
True.
You can always make more money, but can you make more time?
Well, you can definitely always make more money. The trickiness is if you lose all your money, you do lose the power of time with compounding it. You do because, and the reality is you just don't live forever. So if you, for example, lost everything at the age of 60 and you're going to live till the age of 100, it is more challenging to build more wealth over the next 40 years because you've missed the compound effect of the rest of your life, without a doubt. But does that mean you can't rebuild it again? No, because if you employ the law of leverage, you can move beyond that. So in actual fact, if you were leveraging, knowing what you know, with certain partnerships and certain products and certain things, you may actually become even wealthier than what you were. So there are ways to get back a lot of money, but you can't slow down the time between now and when you die. You may be able to slow it down a little bit if you have some money and have the right vitamins and have the right lifestyle and so forth. You probably could slow it down by a couple of years, but you can't buy it. Can't buy eternal life, So
after making millions of dollars, what's the most powerful lesson you have learned when it comes to time and money?
The most powerful lesson I've learned is that you cannot do it alone. Success is a team sport. When you get rich, you have to make others rich with you, and you have to be okay with that. And I think everyone's just trying to get rich by themselves, and you've got to take people you got to take people to the mountaintop with you and be so happy for them that they're making a ton of money with you. You cannot just be mine. You got to be collaborative and open and willing. But it would be that you probably aren't the best at every part of your business. I'm almost guarantee you're not. And you've got to learn where your strategic competences are and incompetences are. And sometimes your strategic competences can get you in a lot of trouble too. So if you're really good at sales, you're probably not going to outsource the sales, and that's going to hurt you long term. If you're great at the delivery, you're not going to exit the delivery, and that's going to slow you down too. So sometimes the things you're great at can be your greatest time thieves. So I would say that the thing I've learned is to not just recognize what I'm strategically incompetent at and outsource that, but also what am I good at, and am I outsourcing that? Because at the end of the day, you just want to outsource everything without losing the value to the client or the customer of what you promised to deliver them. So it's a very fine line, but you really want to be exiting all parts of your business.
Absolutely.
And then exiting the whole business if you can.
Absolutely. And ultimately, there's absolutely nothing wrong with building a business that operates without the main character or the founder, right?
Yeah, and in the same breath, there's also nothing wrong with a business where that if you love selling and you've created a great business and you've got good margins and you love to do it and you're just doing it every day and you enjoy it and brings you happiness and you've got freedom, do it. Like, that's okay too. Don't beat yourself up. You think you've got to exit every single business you get into.
What's your most controversial belief when it comes to money and time?
That bigger is not better. Bigger is not better. There are some people that want to build empires. And I will look at that and I think, for what purpose? Like the rigmarole and the stress required with managing people and staff. I guess they love the journey so much. But for me, I'm like, bigger's not better. I just want quality. So I want quality business, quality tasks that I'm doing that bring me quality joy, with quality people, with quality spare time. And I think an overscheduled diary is a problem, which kind of goes against conventional thinking about, like if you look, for example, I know that Alex and Layla have shared their their calendar, and it appears, and they're wonderfully successful entrepreneurs. I think they're fantastic. I love how they operate. If I got to know them, I'm sure I'd love them. They're good people, right? I can see that. But see their diary, it's just like scheduled. And I think to myself, man, an overscheduled life, and I think Naval Ravikant's mentioned this, an overscheduled life is not a good life. So big is not better, and overscheduled diary is not always better either. So philosophically, I read a book once. It's got to be one of my favorite books of all time. It's called The Ruthless Elimination of Hurry. And that changed my life. And when I read it, it's a story about a young pastor who built a church, and on the way to building a big church, lost his soul. And it kind of goes against the teachings, even in the Christian faith of following Jesus. It's like Jesus never hurried. Even when his friend Lazarus was dying in the gospel, he didn't hurry to go there. It took him 5 days to go to his best friend, and he died. And in the gospel, he resurrects him. He was never in a hurry. He never ran, right? And I'm thinking and in the Old Testament of more of the Jewish faith, God built the world, according to the Old Testament, Genesis, in 7 days, but he rested for a whole day. Even God needs to rest. God. So I'm reading it and I'm understanding these concepts. I'm thinking to myself, man, I was hurrying to piss. I was hurrying to brush my teeth. I was hurrying. I was walking the gym fast. I was peeing fast. I was brushing my teeth. Everything was hurry, fast. And after I read that book, I was like, you don't need to be in a hurry. The Navy SEALs have got this saying, slow is smooth and smooth is fast. I was like, I felt so at ease and liberated. And some other cool stories in the book were there's a tribe in Africa that these Westerners went on this walk with this tribe in Africa. And they're walking very fast and briskly over time. And they need to get to their destination. And then all of a sudden, these tribal men stopped. And the Westerner said, what are we doing? He said, we're stopping here. I said, why are we stopping? Because we need to give our soul time to catch up to our bodies. And I was like, shit. I was like, my soul has no time to catch up to my body. And how I know that is this. Have you ever seen someone do this? You ever done that yourself? Right? This is called, my wife calls it poor man's shake. The poor man's shake. It's the Chinese call it that, the poor man's shake. But we also call it, and I talk about it in my new book, it's called hurry sickness. That's hurry sickness. That's a symptom of it. You're shaking because you're not living in the present. You're living 2, 3, 4, 5 days away. You're living next year. You're living in the future that you cannot control. That's where you're living. And that's your reaction to it in your body. And hurry sickness is soul destroying, and you're never in your best state when you're in a hurry. You're short with your wife. You are short with your kids. You are agitated. You're angry. You're frustrated. You're making rash decisions. You're emotional. You're a blubbering mess. You're just not effective. But that's where people live. And entrepreneurs, we live there a lot because we're we're trying to build the train track when the train's coming. And that's a very anxious place to build from. And so when I understood the ability to ruthlessly eliminate hurry from my life, I started looking at my whole businesses differently. I stopped taking on things. I didn't do things on purpose because I knew that was going to create more hurry. And it was a philosophical wake up call. I'm like, holy shit, this is how I want to live. Not how I want to make money. It's how I want to live. So from that moment on, I am now conscious. When I brush my teeth, I just slow down. It's this feeling of whoa, I'm giving my soul time to catch up to my body. I walk to the gym now, and as I walk, I swagger a bit. I slow down and walk. I slow down on purpose. And I'm like, whoa, I'm walking fast. Slow it down, right? When I'm it's just trying to catch yourself in those moments. Slow it down. I don't overschedule my diary. If you looked at my diary, I'll pull it up. Look at this. People say to me all the time, Lloyd, I can't do this because I know you're busy. Well, I'm not that busy. I've got lots going on at the minute, but that's my diary. Look at this. Look at this. Look at this. Look at this.
A lot of freedom in there.
Look at that. There's a lot of white space in there, right? I mean, I've scheduled things, like even this morning, we got here, come in the studio 8 o'clock. So I know I'm here, right? And we've got things to do, and it's in there. But in between that, I'm still going to do things, but I'm not overscheduled. Yeah. And I look at my diary, and I'm either going to look at my diary and be happy with that, or I'm going to be anxious by it. Now, when you're starting to come up, there's going to be a lot in there. But your job is to build yourself out of it, and you want to get a diary like that.
That is one of the biggest flex I can see right now from an entrepreneur. How much freedom do they have? This is our this or that segment. So you literally just choose one or the other. Tea or coffee?
Tea.
Sushi or steak?
Steak.
Expert or jack of all trades?
Jack of all trades.
Product or service business?
Product.
CEO or founder?
Founder.
Instagram or TikTok?
Instagram.
Instagram or YouTube?
YouTube.
YouTube or X?
X.
Photos or videos?
Videos.
Short form or long form video content?
Long form video content.
Newsletters or podcasting?
Podcasting.
Organic or paid marketing?
Paid marketing.
1 million followers with low conversions or 1,000 raving fans?
1,000 raving fans.
Building a talent or hiring a talent?
Hiring a talent.
A talent at a high price tag or multiple cheap C talent?
One high priced talent.
Property investing or shares?
Shares.
Shares or crypto?
Shares.
Shares or buying businesses?
Shares.
Building a business or buying a business?
Building a business.
Passion 6-figure business or stressful 8-figure business?
Passion 6-figure business.
Sales or marketing?
Marketing.
And the most important one, time or money?
Time. Both.
If all your books, your podcast, your content, everything to be known about you will be taken away, and you can only leave 3 things for other business owners to become time rich, what would that be?
All my books are taken away?
Everything.
What? So can I leave him a note? Like, what am I leaving him? A note?
3 thoughts
3 thoughts.
that will help them become time rich.
Ask who, not how. So who can do this for me, not how can I do it? Outsource everything but your genius. Optimize for time, not money.
Last time I asked you these 2 questions, this is just a slight tweak this time around. What's the worst business advice you have ever received?
The worst business advice I ever received. You can't do it. It can't be done. And don't be a jack of all trades. Yeah. I can't think of the bestest advice that I received because I never took it because I knew it was bad advice. Yeah.
What's the best business advice you have ever received?
You can build more businesses and you can do more with working less. You can do more with working less. You can achieve more. There's more in you. You're not playing big enough. And just because you're playing big doesn't mean you've got to work harder. You don't have to toil to create wealth.
You have a new book coming out very soon at the time of this podcast, it'll be either just coming out or it will be out at the time that you're listening to this conversation. So what is the book about and where can people get it?
So my new book is my first published works called Become Time Rich. Will be available on the 1st of June in bookstores, Barnes & Noble. It will be on Amazon, by hardcover, Kindle, audiobook. It'll be on Audible. But we're doing a big book launch on the 1st of June in the morning at 9 a.m. Australia's biggest book launch ever, but it's global. We'll be on Zoom. We're going to launch it. But the book will be available then to buy on the 1st of June and also at the book launch. And it's just going to be so exciting. Like, Become Time Rich is where I've encapsulated the 4 time rich laws that I've applied to my life to be able to create that calendar that I just shared on the show.
In terms of this particular book being your third book, what are you most proud of?
I'm most proud of my relationship with my wife. And I'm proud of the network of people I've attracted around myself. And I'm proud that I've lived my life on my terms eventually. Like, instead of living someone else's dream, I've built over time the life that I want to live. So I've done it my way instead of someone else's way. And I'm proud of that because you got to disappoint a few people to do that yourself. And I'm proud of that I've done it. I'm my own man, and there was lots of chances for me not to be. So that's why I'm more proud of that, I think.
Lloyd, it's been an absolute pleasure to have you back on Founders Playbook. As usual, you can find all the links down below. If you're looking for the best financial educator on the planet, Lloyd is the man. You should go get in touch with his team. He can definitely help you make more money, understand everything when it comes to making money now, can even help you become time rich as well. So make sure to grab the book down below. And ultimately, if you applied everything we cover here today, you will probably become time rich and hopefully one day get a calendar like him that is just empty and have the freedom that you're seeking as a business owner and entrepreneur, and not creating a prison for yourself. So make sure to go check him out. All the links are down there. If you did enjoy this conversation, if it brought you value, all I ask is share it with another founder or business owner so that we can get the word out there. I will see you on the next episode. Good vibes for everyone. How was that?
Boom. So good.